Hey guys, Akil Stokes here. Welcome back to the Weekend Trading Edge video, the first of this year. If you guys are brand new, this is a video that I've been doing now for 8+ years, each and every weekend, where I come in, show you the top trading ideas that are on my radar for the week ahead, and of course, give you some tips and hints about how to become a better trader. Despite this being a new year, we're seeing the same old movement in the market, right? We ended this week with a non-farm payroll announcement along with some other jobs numbers, and very similar to the theme of last year, where the market would kind of move one way, then move the other way, then kind of go back to exactly where it was before after every news event. We saw the same thing this Friday. You can see here in the Euro Dollar 1 hour chart, the market started by dipping down, and then corrected that by pushing up, and then ended the week, a little bit higher than when we started, obviously, for that announcement. But you can see with a retracement. And again, that was the theme of last year during high impact news events, and too early to say if that's the theme of this year, but so far it is. Now, speaking of this year, if you guys want a bigger outlook on kind of my investing outlook for this year to come, then check out my next Trading Coach podcast episode. It's called Investing in 2024, 3 things you need to pay attention to. So make sure you check that out. That should be out Sunday night or Monday morning, depending on where you're at. So let's get started on the pound yen. And this is going to be a follow-up on a trading idea that we looked at in live trading room on Thursday. You can see that the pound yen here has come into a previous level of structure resistance, nice little rejection zone up here. And if we go down to a lower time frame, you're going to see that we have a loss of momentum pattern, right? A very steep slope right here with price action going from a swing low to a swing high. And then although we're continuing to push higher, you can see the grade of the slope start to decrease right as we come into that previous level of structure looking left. So when I see this pattern in general is a potential relief pattern where we would expect some type of pullback, retracement. When I see it at structure, it just makes it even more powerful. Now, the next question is, okay, where is price expected to go to if we indeed do this move? And I would say right here around the 182 even handle. In last week's trading edge video, or last week's trading edge video, we spoke about kind of the power of prediction and how that is underrated. And we spoke about prediction more in making directional predictions as far as which direction you think price is likely to go. Well, the add-on to that is not just being more accurate in your directional predictions, but becoming more accurate in your predictions on both a stop loss, so where the market shouldn't go if you're wrong, and your target profit, where the market should go if you're right. Because I see so many traders that are either cutting their profits short by having their target profit too close, or giving themselves more losses or more break-even trades because they're a little bit too greedy and their profit target is too far away. So once you've worked on the skill of predicting the directional movement in price action, working on stops and target predictions are the next step. And it all comes down to just being a great chartist and understanding price action. If you can understand price action, you'll be good at all 3. So the first thing that I do is, because it's the centerpiece of my philosophy, is I always start with structure. So I see this structure level right in here, and that gives me a good idea of where I'd be looking for targets at. I can then adjust that with different tools. One would be a psychological number, 182, you can see right there. And then if I take my Fibonacci tool out from swing low to swing high, you'll see that we have a 3D2 right above there. And if I adjust my line, not that line, where are we at here? There we go. If I adjust my red line here, you're gonna see that 3D2 also exists right at the very peak of this inside structure level. So 3D2 Fibonacci retracement, 182.20s looks like a good place to expect profit to go to if this trade works out in our favor. Some other clues for this as well is not only do we have a relief pattern, right, a loss of momentum pattern coming into a previous level of structure, but we do have our RSI, our relative strength index, overbought, and we are showing bearish diversions as well. So you can see price action is continuing to make higher highs and higher closes up here, where our RSI is actually doing the opposite. We're starting to dip downward. So another clue that you can add to this potential short opportunity on the pound yen. The next pair we're going to look at is going to be the Euro Swiss, and I know you probably never ever see me look at the Euro Swiss, especially since that incident back in 2015. If you guys are unaware about that, let's go back in the time machine to 2015, where the carpet was pulled from underneath the Euro Swiss. You can see everyone got cute right here. Oh my gosh, there's intervention. They'll never let it drop below this mark, until they did. Boom. It's funny. I feel like a dinosaur now, but this was one of the biggest game-changing moments in the trading industry. A lot of traders realized a lot of things about leverage and loans that their brokers were given to them, and that you can actually go into the negative and have to repay those. But it also made the brokers kind of tighten up and kind of shift how they regulated things, I guess you can say. What we're looking at here on the Euro Swiss is this. We are still at all-time lows, right? So we are at the lowest point we've ever been, and we're starting to consolidate. And all-time lows are a little bit tricky, right? If we were looking at like an index or something like that, like the S&P, where we know that the S&P is naturally going to go higher, looking at an all-time level is pretty easy because we want to go in the path of least resistance. Trading's a little bit different, right? There's a different type of psychological event that happens from the participants in the market when we get to these all-time highs and all-time lows. You would think that if you're a structure-based trader and you need structure to trade, you see these all-time lows, you would say like, hey, I never touch this because there's no structure, there's no safety, there's no, I have no clue that says this is where price is likely to stop at and retrace from. It's a very dangerous position for going long. From a psychological perspective, sellers in this case are going to be scared as well. Buyers are going to be excited because they say, hey, this is the cheapest I've ever been able to get this. And if you're interested in buying something, why would you not want it at the cheapest price? So it's a little bit different type of battle. So I say that just to be careful here, because you don't want to get ahead of yourself. But what we do have here from a technical perspective is a bearish flag pattern, or bearish pennant pattern, right? We have a flagpole coming down here, and you can see this consolidation, this wedge, this triangle with the range tightening and tightening and tightening, right? This is a bearish pennant pattern. Typically, you see these pennant patterns break to the downside, but I would tell you is this. Wait for confirmation. I don't think unless you have some type of bias already, there's no need to get ahead of things right here. Wait for the market to show you which direction it's likely to go in, and that would mean a violation of the upper trend line or a violation of the lower trend line. Now, for me, for the lower trend line specifically, actually for both, I'd prefer to see a violation of the horizontal versions of that. So this range looking like this, I'll make that a different color just so it stands out to you. That's just my personal preference when it comes to support and resistance, and you'll see that in a little later example as well. But regardless of how you look at it, wait for price action to prove that whatever your level of importance at has been violated, and that will tell you which direction you should be involved in this trade. Next, we're heading to the Australian S&P. We're going to be here on the 4-hour chart where we have an advanced pattern formation. I've taken 4 trades this year so far, and all 4 of them have been pattern trades. Now, year didn't start off too great, right? 0 for 3 right off the gun, right? Luckily ended the week with a nice winner on, what was it, pound dollar, I believe it was, pound dollar, but an 0 for 3 start. So, but got our win. So 1 for 4, pop the champagne. I can say that it's not going to be a winless year, but on the other hand, and we always talk about how we measure results in trading, process over outcome, my goal is always to have a 100% year when it comes to taking good trades. Usually I make some type of dumb mistake and I ruin it, but so far, although I'm only, 25% accurate in the win-loss column, I am 100% accurate in the good trade, bad trade column. And I know that ultimately that's going to be the number that will benefit me the most overall. But what we have here is an advanced pattern formation. It's going to be called a cipher pattern. I'll draw it out a little bit here, but you can see by the triangles, the movement of this pattern looks like this. We have a swing low to swing high, which is our X to A, a retracement, which is our A to B, a second extension, which is our B to C, and then we're looking for a decompletion that comes down here to the 786. That's the technical start of the completion point, and that zone goes all the way to our X leg. So if price action were to come down into this level, this would offer a buying opportunity in the form of a bullish cipher pattern. Now we won't stop here too long, but you can see copper, same thing, bullish cipher pattern. This one is a little bit closer to completion as we almost got down there to end the weekend, but same type of deal. The official entry point is the 786 if you're aggressive, but you can also look anywhere in that zone for potential reasons for entry. So double tops or double bottoms, lower or higher high, higher closes, pin bars, whatever is your cup of tea. Here on oil, going with the commodities again, we have a head and shoulders pattern. It hasn't technically completed, but it's very, very close. You can see price action came down for our left shoulder, bounced up, gave us the start of our neckline, came down, gave us the head, bounced up again, gave us a right shoulder. This was a little bit annoying how it's higher there, but whatever. The market doesn't like to make it easy for us. And then we finally have our right neck, and we finally came down for our right shoulder and pushed back up to end the week. Now the thing is, we haven't technically violated any of our important marks, right? So again, if you're a trend line trader, you're connecting the dots between the left neck and the right neck. This dotted white line is going to be the level that you need to see broken in order to have a technical head and shoulders. For me, it's horizontal support and resistance. So this red line going from left to right is going to be the level that needs to be broken. And with this previous to last candle, that actually bounces a little bit higher to there. So the market's not making it easy for us at all, but if we can violate those levels, the expectation is that we would travel back up to our previous level of structure. As my mentor always told me, look left, structure leaves clues. That's going to be these highs right here at $76. Now, before you go, do me a few things. Hit that like button, subscribe. If you're not subscribed already, I do a lot of videos throughout the week here, so make sure you're subscribed. That way you don't miss them, kind of like that NASDAQ video I randomly put out on Thursday. Also, make sure you check out the Trading Coach podcast. We got some really cool episodes coming up. We've had some really cool episodes come out recently, so make sure you're in the mix. They're short, they're sweet, they're very educational, and I appreciate all the reviews and the nice words that you guys are saying about it. Gets me motivated to keep it up in 2024. So until next time, plan your trade, trade your plan. Akil out.